On behalf of 12 Oak Senior Living, I would like to welcome you to this overview of the VA pension benefit. My name is Debbie, and I will be the moderator for this presentation. And I would like to welcome Patty Servais, the founder of Elder Resource Benefits Consulting. Welcome, Patty.
Thank you, Debbie.
I will turn the presentation over to you, and maybe you can start by telling us a little bit about your background.
Okay, great. So my background is I started as a CPA with Price Waterhouse, and then I went to the Boston Globe, and then eventually I was a lead accountant on the merger between the Boston Globe and the New York Times. And then I was the executive on loan to the New York Times from the Boston Globe for a few years. Then in 2005, I had a bonus baby at the age of 41, I think, and decided I wanted to do something where my CPA could really make a difference with seniors. And that's when I came across this VA pension benefit and really started to focus full-time getting seniors the VA's basic pension with aid and attendance. I am a VA accredited agent. That does not mean that I work for the VA. I do not. I'm also not a veteran services organization, meaning disabled American veterans or Vietnam veterans. I am the Surveys Consulting Group is a standalone organization where I work with my clients to help them get the VA benefit. So let's get started on this VA benefit. So this is a very little known benefit, and there's a lot of misinformation about it. So I really want to help you guys to understand how this can work for you or work for your parents. The veteran population is very, very large in the United States. And as of September 2020, there are 7.6 million wartime veterans, and that doesn't include the surviving spouses, which are actually more than double that amount. The US Congress is involved in helping the VA set the regulations, and they know that veterans are more likely to have finished high school, less likely to be poor or near poor. And so their focus is really to make sure that veterans and their surviving spouses get this extra money to help them age in place. So it's not like Medicaid where you have to wait until your assets are down to $2,000. It is a much more lenient program and has really been instrumental in allowing veterans and surviving spouses to age in place. So the VA benefit is tax-free, which is awesome. And every time Social Security has a cost of living adjustment, the VA benefit has a cost of living adjustment as well. So these figures are for the year 2021. And if at the end of 2021, we're told Social Security is going to have a cost of living increase, these benefits are going to go up by the same amount. So as you can see in the second column, our VA benefits for surviving spouses are $1,244 per month. For a well veteran with an ill spouse, even if that veteran's still living at home, the maximum benefit is $1,519. For a single veteran, the maximum benefit is $1,936. And for a married couple, the maximum benefit is $2,295. So let's go through this example of what that can mean. In our example, we have a resident with $100,000 in assets, an income of $3,000 a month. And if you're a married couple, it is your combined income. But in our example, it's $3,000 a month, whether you're single or married, and a monthly facility fee of $5,000 and no other expenses. They would be out of assets in a little over 4 years. But with the VA benefit, you can see that instead of a monthly shortfall of $2,000 a month, our surviving spouse only has a monthly shortfall of $756, which translates into her assets lasting 11 years instead of 4 years. I mean, that's a huge difference. Our well veteran with an ill spouse, it changes that to 17.3 years. Our single veteran, it changes it to 130 years because they're only negative $64. And for our married veteran, it turns them into a positive position, meaning that the assets theoretically could last indefinitely. Now, as you can imagine, for the VA to be giving out this large sum of tax-free money every month, there's going to be some significant criteria. And that's what I'm going to walk through with you now. These criteria can be a little tricky. My goal is that you finish this video understanding how this VA pension works so that you don't allow the nosy neighbor next door or somebody else, even if it's the VA, to lead you astray on how this pension works. So the criteria build on in a stair-step fashion. So of course, to even begin the process, you have to have met the military criteria. And in general, the military criteria is 1 day during a period of war, at least 90 days in total, and that you were other than dishonorably discharged. For our surviving spouse, you have to have met the marriage criteria you meet the military criteria by being in an active marriage with the veteran at the time of his death. And how that translates is if you divorce the veteran, unfortunately, you divorce the benefit. So you still need to have been in an active marriage with the veteran at the time of his death. And if you were married to anyone other than the veteran after November 1st, 1990, you have to use the military criteria of the person you were last married to. That can get a little tricky. Always feel free to just call us. We'll gladly go over your marital status and marital situation with you. We're going to delve into the military criteria a little bit more in the next slide, but moving on to step 2, once you meet the military criteria, we're going to look at the medical criteria, which the VA calls custodial care. And you have to be really careful with that term because it does not mean custodial care being in a nursing home. So custodial care is a definition set up by the VA, and you want to make sure you use the VA's definition and not Medicaid's definition or somebody else's definition. VA's got the money. We want to use the VA's definitions. And then the third criteria is the financial criteria. There's an income test and an asset test. So what I like to say is, if you meet the military criteria, this is no longer a yes or no benefit. It's if and when. If you meet the medical criteria, when you meet the financial criteria, and if you are too healthy or too wealthy for this benefit today, do not be sad. Nobody wants to be sicker or poorer, but I want to make sure that you have this information in your or your parents' retirement toolbox so that the minute they qualify for VA pension with aid and attendance, you are on top of it. Okay, so delving into the military criteria. This is a period of war slide. You might want to pause it and check to make sure that your loved one meets these periods of war. World War II, December 7th, 1941 through December 31st, 1946. This is where we first came up with the know-it-all neighbor next door phrase, because people will tell you that World War II ended on December 31st of 1945, or they'll tell you that it ended on D-Day. They have different dates, all of them in 1945. But for this pension, Congress has set the end of World War II as December 36, 1946. So we want to use the dates that get us the money. The Korean War is from June 27th, 1950 through January 31st, 1955. Again, the History Channel would disagree with us. So it's these dates that are important. The Vietnam War has 2 periods. I'm going to talk about the second period first, which is August 5th, 1964 through May 7th of 1975. As long as you served at least 1 day during that period, were in service at least 90 days on active duty, and were other than dishonorably discharged, you meet the criteria. Now, you'll notice that I've never said, hey, you need to see combat or you need to have served overseas, because the fact of the matter is that's not a requirement. You could have been stationed in Topeka, Kansas with the U.S. Coast Guard and never set foot on a boat. And as long as it was 1 day during a period of war, at least 3 at least 90 days in total, and you were other than dishonorably discharged, you meet the criteria. Now, that criteria changed for the Persian Gulf War and for the Iraq War on August 2nd, 1990. Now we need to have 2 years active service or the period for which you were called up active, whichever is shorter. Now, it's important to say the period for which you were called up active, because this is not a benefit for our National Guard or our reservists. This is an active duty benefit. So if you're in the National Guard or you were in the reserves and you were called up active, and you were called up active for, let's say, 6 months, and you served that 6-month period and were honorably discharged, then you don't need to meet the 2-year requirement for the Persian Gulf. The period for which you were called up active works for you. Now, the first period of Vietnam, this was before we were saying we were in Vietnam. And what they have said is, okay, we were there. Bay of Tonkin hadn't happened yet, but for our veterans who were actually serving in the country of Vietnam, at any time, just one day, remember, from November 1st, 1955 through August 4th of 1964, if you were in Vietnam, served at least 90 days, although all those 90 days don't have to be in Vietnam, and you were other than dishonorably discharged, you're going to qualify for this benefit. So that's our only period where you're stationed, where your duty is happening, has any impact in that benefit, just that little lead-in period to Vietnam. All right, so hopefully everybody meets the military requirement. And again, you can always schedule a call with us and we'd be happy to go through your personal situation with you. Now we'll move on to the medical requirement. In order to have the VA treat your monthly facility fee as a medical expense, the resident of the independent or assisted living must require custodial care. And the VA defines custodial care as regular supervision due to physical, developmental, mental, or cognitive disorder. That's a mouthful, isn't it? How we shorten it is, will your doctor say that you are unsafe to live at home alone? If the answer is yes, it's, then we're going to be able to get the facility fee to count as a medical expense. The other way, and the more obvious way, is do they need the assistance of another person with at least 2 activities of daily living? Like, do they need help with dressing, with bathing, transferring, assistance toileting? Those would be 2 activities of daily living. What's excluded as an activity of daily living is medication reminders, transportation, housekeeping. Did I already say med management? There's 4: med management, transportation, housekeeping, and meal prep. Those 4 are excluded from counting as activities of daily living. But if you show me somebody who can't prepare their own meals, who has trouble managing their meds, maybe they can't drive anymore, I'm going to show you somebody that a doctor is going to say those people can't live at home alone, right? How could they eat? How could they survive? So let's go through it in a little more detail. Let's say that we have a resident who needs to live in, let's do independent living, because they were a failure to thrive at home. And their doctor says, hey, they're unsafe to live at home alone. We're going to meet our regular supervision criteria. And I'm going to give you an example of this. We call it the green moldy bread example. I had a gentleman, he moved his father in, emergency move, into an independent living from Phoenix to New Jersey. And I'm working with him. The VA benefit starts accumulating the first of the month after we file. So I'm working with him on August 31st, and his dad needs this benefit to be able to stay in the independent living. And I'm asking him what care needs he has. And the son's not giving me anything. I'm like, are they helping with dressing? Are they helping with bathing? No, no, no. Is he still driving? Well, we left his car in Phoenix, but if I gave him a car, he could drive. And I said, okay, can you tell me why this was an emergency move? No notice, move him from Phoenix to New Jersey. What was going on? He goes, oh, I went out to Phoenix to visit my dad. He had me come over for lunch on Sunday. and he offered me a rancid ham sandwich on green moldy bread. I said, aha, that is not, that's not fine. That's failure to thrive. We'll eat inappropriate objects. It's not meal preparation because that one's excluded. But when we told the story of the green moldy bread to the VA and we had the doctor's backing, he was able to get the VA benefit. So custodial care, although it's a little bit more complicated to understand, it is usually the first way that people in independent living get the benefit because they're living in independent living because they got into some trouble at home, potentially mismanaging their medication, eating rotten food, things like that. Again, this is something that we go over specific to your situation when you're chatting with us. So who qualifies? All nursing home and memory care residents are going to meet the custodial care requirements, all of them. Most assisted living residents and some independent living residents. I say most independent living residents because I did have one person who didn't meet the criteria. She was living there with her husband. He passed away. She loved her community and her friends that she'd made there so much that she did not want to move out. If they'd had independent living, she probably would have moved to the independent living section, but they didn't. She stayed in assisted living. She belonged to 3 bridge groups that were outside of the assisted living that she was driving to. So she had no care needs whatsoever. I've been doing this for 16 years, and that's the only person I've ever met in assisted living who was living there, not with a spouse who did not meet the medical criteria. I say some independent living residents because, of course, with all the fabulous things that are offered in independent living communities, especially at 12 Oaks, we have people moving in who really don't have a level of care yet. And for those folks, this is really knowing about the if and when, so that you understand if I start needing medical custodial care, what the VA calls custodial care, this benefit is here for me. People living at home, receiving home care, or needing supervision are also going to meet the criteria. So now we're going to get into the financial criteria where meeting that medical test is going to become so important. The VA says if your income is less than the pension benefit, you've passed the income test. Now, what's income? You and I would all think of it as pension, Social Security, distributions from IRA, dividends, interest. And oh my gosh, look at these pension values, right? Is your Social Security and your pension less than $1,244 per month as a surviving spouse? Maybe yes, but probably not, right? So you right away might think, oh my gosh, I am never going to qualify for this pension. Why am I wasting my time with this video? You're not wasting your time because what we all think of as income is not income for VA purposes. They have their own definition. Income for VA purposes is everything we think of as income. All the things I just went through: Social Security, pensions, distributions from IRAs, 401ks, dividends, interest, minus what you pay to the independent, assisted living, nursing home, or home care, as long as you met that custodial care requirement. You minus those out, plus minusing out your Medicare deduction, plus minusing out what you pay for medical insurance premiums, not your copays at this point, your premiums. And if your resulting number is less than the pension you're going for, you pass the income test. So here's an example again, just to bring that into sync for you. It's the same example that we used at the beginning. Let's say you have income of $3,000, monthly facility fee of $5,000. Your income for VA purposes is $2,000. Now, I have actually had the phone call where somebody saw me giving a presentation, called me up the next day and said, hey, Patty Surveys, I was at your speech yesterday and I just got off the phone with the VA and I want to know what kind of game you're playing because my dad's never going to qualify for VA benefits. And I said, oh, well, why don't you tell me what you said to the VA? And he goes, they asked what my dad's income was. I told them, and they said his income's too high. He's never going to qualify. And I said, well, could you tell me what you said to the VA about your dad's income? And he said, well, funny enough, exactly your example. And I said, just humor me. Tell me how the conversation went, what you said. Oh, he says, they asked me how much is his income. I said $3,000, $36,000 a year. And then he didn't say anything. So I was waiting. And he said, hello, are you still there? I said, yes, but I'm waiting for the part where you said to the VA, his facility fee is $5,000. So his VA income is negative $2,000 or negative $24,000 a year. And he goes, oh, I didn't say that. I got to go. And he hung up on me. So it is very important for you to remember that if someone from the VA asks you what your income is, it is a math test. And if you meet the custodial care requirement, you get to minus out your facility fee, your Medicare deduction from Social Security, and any medical insurance premiums that you pay. Now, in addition, you're eligible for a partial benefit. Let's say you were lucky enough to have $6,000 in income and your facility fee was $5,000. You'd have VA income of positive $1,000 or $12,000 a year. What's the VA to do? Essentially, they're going to take that $1,000 of positive VA income that you have, and they're going to minus it from your maximum VA pension. So looking at our surviving spouse, 1244 minus $1,000, we're left with $244. All the way down to our married veteran, where we're left with $1,295. And if you are not receiving the maximum, if you're in this situation where you're a little bit positive and you receive a lesser number, at the end of every year, even earlier, if you have higher medical expenses, you might want to file multiple times during the year, but you are able to submit your additional unreimbursed medical expenses like eyeglasses, dental bills, doctor copays, prescription copays. I have a family who files every 3 months because every 3 months, the veteran has over $700 in prescriptions. And so we want to make sure that that extra money keeps coming in. So even if you're positive, as long as the amount you're positive doesn't exceed the maximum VA pension, you're still in the running for some money. So better to get this going, receiving a partial amount. And if your regularly occurring medical expenses increase, it would be an update to your file. And you would also be able to use that shortfall money to offset your medical expenses in kind of a flexi spend type of way. Okay, so the asset test. Assets must be less than $130,773. This excludes your home. The VA does not count your home in that number. Now it says in 2021, and that's because just like our income, our asset amount will go up if there is a cost of living adjustment to Social Security, and it'll go up by the same percentage as the Social Security percentage. There is a 3-year look back period for asset transfers beginning on October 18th, 2018. So if you transferred before 2018, transfer does not count. If you transferred after 2018, it does count. We're hitting that. You know, if you did it on October 18th, 2018, then on October 19th of 2021, the transfer would no longer be looked at because you're past the look back period. Now, the transfer calculation for how long you're kept out of the VA benefit is not the same calculation as it is for Medicaid. It is much more lenient. If you have a transfer situation, give us a call. But as you can see, at the maximum, you're excluded for 3 years. Transfers include gifting, purchasing annuities, transferring to a trust. So let's delve a little deeper into the asset test. So when somebody calls us, let's assume that they monthly income less all expenses is negative $3,500. I don't know why I did 3,500 instead of an even 3,000 for my example, but that's what I did. And your total assets are $160,773, exactly $30,000 over the 2021 net worth limit. So you have some options. You could wait until your assets are naturally less than $130,000. And since we're negative 3,500, that's going to be in 8.5 months. You could transfer $30,000, which then gets divided by the maximum married pension rate, $2,295, and we incorporate your negative run rate, and we estimate that you would be eligible for benefits in 5 months. And then the third way, and this is the most common way, there are costs to moving into an independent or assisted living, readying the home for you not to be living there, prepaying your funeral, investing in your house, etc. You might very well just meet it naturally by the time you move in. And if you can meet it naturally, that of course is what we advise. Okay, so what counts as an asset? Cash, stocks, bonds, securities, cash surrender value of your annuity. However, if your annuity was purchased after 10/18/2018 and there is no cash surrender value, then the VA is going to count the purchase price as the value for the 3 years after the purchase date. What doesn't count? Your house, your car, your personal possessions. The reason I have the wow by your house not counting is your house doesn't count even if you rent it out to help you pay for your assisted living or independent living. It doesn't count if you sell it in an installment sale. Lots of times families will sell their home to an adult child as an installment sale. The adult child then rents out the home, uses the rental income to pay the parents back on the installment sale. Neither the installment sale payments nor the house count in the calculation of the VA benefit. So that's fantastic. So our takeaways are, if you need regular supervision for physical, cognitive, developmental, or mental ailments, it means independent living people can get the benefit with a doctor's recommendation. The Bright Line Asset Test means more people qualify and have more options than people think. The fact that you can have 130,773, and we can map out when you're going to hit that number. If your house sits on more than 2 acres and it's considered subdividable, but the house doesn't, if it sits on more than 2 acres, we must consider if it's subdividable. And if you can sell the extra acreage separately, then that would count as an asset. But oftentimes, even if it is subdividable, it's not really saleable. It can be pretty complicated. What we like to say is what works with the VA is the truth, but you have to get the truth onto their paperwork in the way that they will understand it. Our typical applications are between like 40 and 80 pages. So they're really quite long, more complicated than doing your taxes. So how the ERBC process model works is the financial responsible party for the surviving spouse or the veteran would schedule an intake call with ERBC, and you can do that right on our website. It's all automated. You just click, oh, I want an initial call and I want it on this day, and then you'll be able to see how many appointments are available that day. You would talk with the Elder Resource Benefits consulting person would give you a call at the scheduled time, go over your situation with you. And if you choose to work with ERBC, we would then send you pre-populated forms, instructions for getting the forms completed, instructions for all the support that you need to pull together, and then you return it to us. And then a VA accredited agent reviews all the data, creates the application, and emails it back to the financially responsible party, which can be the veteran themselves or the surviving spouse themselves, but usually we're working with adult children. And we email it back to them. They print it out. They have the veteran or surviving spouse sign it, and then it goes off to the VA. Our average time to award is 3.5 months after the full signed application has been mailed to the VA. So why ERBC? One of the reasons people choose to work with us is we have no financial product sales. We don't refer to any attorneys. We don't refer to anybody to help you restructure your assets. If you were going to do some gifting, we would be happy to talk to your lawyer to make sure that we feel it's in compliance with VA regulations, but we don't get involved in any sort of financial movement. We believe that, you know, your assets are yours to manage, not for us to get involved in. By focusing just on VA benefits, that means that we really have an extremely high success rate, over 99%. Less than 4 months average time to award, like I said, and we have been successful in getting the VA to pay the community when the claimant passes away before the VA settles their claim, or the claimant's estate. You know, there are rules about that, and we go through those in the paperwork that we mail you when you're working with us. So to schedule an appointment with us, you go to elderbenefitsconsulting.com, click the Book Now button. Our appointment scheduler will come up and you pick an appointment that works for you. Or if you need assistance in booking an appointment, you can call us at 508-485-0039 for help with scheduling. You can also email Jeannie at elderbenefitsconsulting.com and she can help you get your appointment booked. And that's it. We hope to be working with you soon. We hope this benefit turns out to be a great thing for you. And
Thanks.
now, you're welcome, Debbie. I'm going to go back to Debbie.
That was a lot of great information. And, you know, it's certainly good to know that probably there are more veterans and surviving spouses of veterans who can qualify for this benefit than may be assumed, because there's
oh my gosh. The last time I looked, I read in the General Accounting Office's audit that they thought something like 11% of the veterans who should be getting this benefit were getting it. And the numbers are even lower for the surviving spouses. People just don't really understand it. And, you know, people are getting bad information, right? They're thinking, hey, my income needs to be less than $22.95, not realizing minus out your independent living, you're there.
Right, right. So this is a great benefit for people who are looking to move into senior living. And, you know, it's a top of mind concern, I think, for most the families that we work with is, you know, how am I going to pay for it? How am I going to make sure that my loved one doesn't run out of assets? And, you know, looking at this as not a yes or no, but, you know, if I have the service record, you know, then it's just a matter of, you know, when, the if and the when. So, you know, for people that are tuning in today, you know, if you know that your loved one or your spouse has the service record, it certainly is worthwhile to look into this benefit, because it's a lifelong benefit, right, Patty? Like once you qualify for this benefit, even if you started off getting this benefit at home and then moved into senior living and then, you know, eventually might need a nursing home, this benefit goes with you, right?
Yes, it goes with you. Once you're on Medicaid in a nursing home, it's reduced to $90. I have had people, like, they're in assisted living and they move in with a daughter and the daughter doesn't want to charge them for home care, then they might lose it, right? Because they don't have a medical expense. But most people keep it for the rest of their life or until they go on to Medicaid and skilled nursing and get it reduced to $90.
Yeah, that's great. And I think another important thing for families is, you know, might be a way to hang on to the family home. I mean, for this generation, you know, a lot of our families don't have a long-term care insurance policy, but their home is their long-term care insurance policy. And families would prefer not to have to liquidate that home, you know, to pay for care. So it's wonderful that there's that exclusion. So a couple of questions have come in regarding the home. And one of them is, you know, what if the claimant sells their house and then the sale of that home puts them over that asset?
So if, let's say you sold your home and now your assets are $160,000. So you're over that $130,000 mark. Well, what the VA has said is we're not going to deal with that mid-year. So if you sell your home in June and you're at 160, we do need to notify the VA, but it's just a notification. And then when your assets go back down below 130, if that happens before December 31st, there will be no disruption to your benefit. So sometimes I'm, meeting with children and they're like, well, we're going to, pay to have such and such replaced at mom's house before it's sold. I'm like, okay, well, make sure that you are charging her the appropriate amount, because we want that to come off the sale price, because we want mom to be back below that asset limit as soon as possible. Doing these things for your mom and keeping her assets artificially high is only helping the US government. It's not helping your mom at all.
Mm-hmm.
But if she, let's say that she got 250,000 and she was above the limit at the end of the year, that's okay. The benefit would stop January of 2022, and then we'd get her back onto the benefit when her assets were back in line again.
Yeah, so that's to your point of this is a more generous benefit than Medicaid.
Yes.
Yeah. Awesome. And then, if somebody, is above that 130 asset limit, does it make sense for them to still call, ERBC and just really make it part of their financial planning process to kind of, I think you can even help them figure out, if they're above the asset limit, maybe projecting out at what point they would be at the right number to
Absolutely.
go
Yeah.
ahead.
What we tell people is, they give us a call. Maybe they've got $220,000. We put in all of their information and we go, okay, if nothing changed, if your mom spent nothing else, we think that you're going to qualify in January of 2023 or whatever it is. But other expenses come up. So if your mother hits $150,000, call us then, because not only is the cost of living adjustment going to increase that $130,000, but if you're at 150, we might say, all right, time to start gathering the medical information from her doctor, the forms from the assisted living, and start prepping to file. But can you imagine your mom's in assisted living? You're wondering how you're going to pay for this for 5 years. Just having the peace of mind of knowing that, hey, in 18 months at a minimum, we're going to be qualifying for VA benefits. It just takes the stress off knowing that it's there for you. And people who don't call, it's nebulous. They think it might be out there for them, and we can really nail it in for them and be a big part of their plan.
Yeah, we have another question that just came in about, would it make sense to have mom maybe have a 2-bedroom apartment, maybe, have something that's more expensive so that there's going to be that differential is going to shift. So maybe mom doesn't have to be in a studio apartment. Are there cases when, going for the more expensive apartment may help in that scenario?
Oh my gosh, yes. I had this lady who called. We walked through and I said, okay, it looks like your mom's benefit is going to be about $900. And she goes, what? I was told it's going to be $1,244. And I'm like, well, with your mom's income and what she's paying for the assisted living, she's positive every month about $300. So, she's going to get a haircut. And she goes, oh my gosh, we just passed on the room that overlooks the waterfall. Mom really wanted it, but it was $250 more. Are you saying that she can have that room and her VA benefit would go up by $250? Yes, absolutely. So people do call us, they're looking at a studio and they realize they're only going to get $300. But if they move into the 1-bedroom, their benefit goes up by almost $1,000 and the differential isn't quite the $1,000. So excellent question. We love it when people get to live in nicer circumstances because of the benefit.
Absolutely. Well, this has been really interesting. It's certainly, there's a lot of kind of moving parts and pieces. You really have to know what you're doing, because one wrong answer is going to kind of derail the process and maybe delay getting the benefit. So it seems like, having expert advice is certainly wise in this really important decision. For the folks that have attended this presentation, There is a very comprehensive funding guide on the 12oaks.net website. So please visit the website to download your funding guide. And for people who registered for this presentation, we will be sending out a follow-up guide specifically about the VA benefit and application process, and a lot of great information to help guide you. And so we appreciate you, Patty. Thank you for joining us today, and thank you for everyone who attended.
Thank you, Debbie.
Thank you all for attending our webinar today on the VA pension benefit. We hope you found this a valuable resource. We also wanted to let you know that 12 Oaks has partnered with our presenter, Patty Servais, with ERBC, to offer a free VA benefit audit for prospects and residents of 12 Oaks. And if you qualify for the benefit, ERBC will also work with you to file your claim. For more information, please contact a representative from your closest 12 Oaks community. And from all of us at 12 Oaks, we'd like to thank you or your loved one for your service.